Hi everyone, it's Zach with Palantir Research. This earnings surprisingly are much better than I expected, honestly, and here's why. So pre-market today, earnings release. As you can see, the market is reacting euphorically, and at the time of this video recording, it hit above $18 earlier in the day. Now, my focus are on the earnings metrics that are important to me, and the last two are actually the biggest factors, honestly, in my opinion, and of course, revenue too in the beginning, but I'll go over that and what my expectations were, but some of them didn't do well also, so I'll talk about those well, like net dollar retention. But altogether, I think this is still a great quarter, and I'll also go over the earnings call itself and what this means for my own personal investment thesis and the company's narrative. Remember, this is not advice for your own situation. So just diving right in, starting with the obvious, third quarter 2023 earnings are positive with 3 cents. And that's big, but also already expected from investors, since this is the fourth positive EPS in a row, and the accumulation of the last four makes Palantir GAAP profitable officially on the scorecard. But also, now that it's official, they are eligible for Standard & Poor's or S&P index eligibility. The big implications of this, of course, is obvious that for big funds, when they try to get the right weighting of the funds with different companies, this means they need to have a little bit of Palantir if they don't already have it. Now, this doesn't mean it's happening immediately, and we don't know for sure how long it'll take for it to officially happen. Plus, it'll relatively be recent that they allow F-share companies like Palantir to be allowed into the index. But great score for the company, and just looking back a couple years ago, who would have thought that we'd be here today? Management has continued to make this a priority, and remember, they need to continue maintaining this. So if they have a really bad quarter of negative income, it could negate the last three, putting them negative. But I honestly do not expect that to happen with the nature of their business. Now, revenue-wise, this has been and still is an important metric for investors. Now, it hasn't been performing that well, and the degree of folks that care about it in relation to their patience of seeing it ticking up eventually, that depends. But for growth companies, the growth rate and its expectations of revenue of Palantir needs to eventually get back to over 20% and maybe even 30% to justify some of the valuations depending on your model. I'm kind of on the lenient side right now here of watching it if they are at that turning point, because this has been in a downtrend when doing year-over-year comparisons. Even if revenue is still going up positively, it's slowing down. But as a reminder, last quarter's guidance for Q3 was $553 to $557 million, with them beating their own guidance at $558 million in revenue. This, and now being at a 17% rate of growth now, this is huge for investors, and I believe the market likes this because the narrative of the company is at stake and can mess up previous model assumptions now. With these revenue figures, I think this might be the biggest patience tester, honestly, for investors that are either buying or selling the stock. There's only so much of a continuation or a turning point you can give a company when they are possibly having other opportunities in the market to go after. Now, that's when you're looking purely at the numbers. So beating their guidance and turning this around from 13% is big. But we need to see that this is mainly driven by U.S. commercial revenue, and that's not such a bad thing. Lumpy government business just means we gotta let those big contracts roll in every few years for renewal, or when there is a new project, maybe you get that 33% here, and that's amazing for U.S. commercial revenue. If this can actually be sustained, it'll actually outweigh that government. Now, government obviously evening this out here, lagging at 10%, but remember, it will be harder to grow these numbers as they get bigger, at least mathematically, since government is a big part of their business. And side note on revenue, it's important to remember net dollar retention, which came in previously at 110%. This is a metric to see how you're doing with your current customers, so it's always good to be over 100%, meaning you get more dollars from existing customers, and even if you lose customers, it's being outweighed there. It is being offset by the increase in revenue of those staying. This metric came in at 107% here. So this is still continuing in a downwards trend. Now, I'm more forgiving for this because growth looks to be returning at least or at the turning point. But we still want to ensure this maintains over 100% as much as possible, and obviously want it to be the highest we can make it. But this technically does get harder over time as their pie of revenue from existing customers can possibly level off over time. And that's if contracts get huge. But who knows? Certain SaaS providers can keep this up if that's valuable and spreading to more departments and use cases across their customer organizations. So always great to watch out for this. Now, operational cash flow, my favorite metric to see the health and survivability and flexibility of any company. Palantir is in no danger of bankruptcy, and the continuation of their company to be around forever at this point is basically guaranteed with positive operational cash flow and things continuing the same. So it's good to see this maintaining its positivity and slight growth from prior year. And this, of course, affects their cash and treasuries on the balance sheet, which can guarantee them a certain level of net income here. And growing this and their cash balance during this high interest rate environment all the more means high interest rates don't weigh them down, which is flexibility here that I mentioned to pursue growth rates without getting eaten up by trying to beat a certain rate of return here. Now, right now you want to invest to beat treasuries, but if you can't with all the risk factors or it's just not guaranteed, it still helps the company for the next opportunity, thinking like a Warren Buffett who just parks his money there until a good opportunity comes along. And this flows right into the stock-based compensation because their cash flow is obviously crushed by this because if you pay employees with shares, you use less cash to pay them. I'm just highlighting here now its effect on income from operations, and we've leveled this off much further from the Q3 2022's levels. Now, the upside here is that this means you have more invested employees that win if the company wins, so it should make them highly motivated. But the rate this happens still is important balance because our shares as investors outside of the company own less of it. Therefore, it makes it more difficult for the stock price to go up when there are more shares available, hence why it's called dilution. Now, when you put this up against revenue the last few quarters, that is trending up. So even if this stagnates or doesn't go down as fast, this will become more favorable in this ratio. Now, customer count and guidance, I covered these in my last two videos about the specific earnings report. I talked about it a lot as well in my live, and then I also posted a video of just the earnings part. So as you can see, customer count has grown at a good rate. In my earnings preview video, I wanted them to align with the 38%, but still hitting 34% is nothing to sneeze at, especially when you look at the commercial customer count growth of 45%. This is much better than I originally thought in my raw reactions video from earlier today since I didn't see that breakdown. This is huge for Palantir because AIP bootcamps and AIP cons have basically been spouted by management that demand is through the roof and it's finally showing. And it's showing for the commercial side who's the main audience for this marketing. Usually you want this to come through on revenue if you are impatient, since that's actual dollars to the business and is more provable. But customer counts, which means they have some dollars, although not big for the trials, is a proxy for Palantir investors due to the ramp up time that's needed for clients and wanting or needing to do trials as they ramp up their value to clients. But if they're doing this much quicker here, it sounds like it's working much better than what they were doing before. The expectations has always been to funnel customers in, and as usage goes up, they'll be paying Palantir a lot more over time in revenue if they can get more, of course, out of Foundry, Apollo, and just setting up their ontologies, with AIP being the one that kind of ties it all together here. Now, guidance. Honestly, I just care about revenue and its growth rate when doing comparables. With them being operationally cash flow positive, I'm okay with them holding off on profit as long as they grow. Q4 guidance came in at $599 to $603 million in revenue. If they hit above $600 million in a single quarter, that'll be a huge milestone, and I love this. The bottom end of this range maintains that growth rate when compared to Q4 2022 at 17%, but if they have slightly exceed this actually and hit, say, $604 million, they'd be at 18.5% year-over-year growth, which would be an increase from the 17%. If next quarter ends up like this one where they can eke out that slight beat, then I definitely won't complain here, and they're on the way, it sounds like at least, to getting above 20% again. And then full year 2023 guidance came in at higher than I expected, whereas previously in excess of $2.212 billion for the year. Now they put a range, so they are kind of capping it, $2.216 to $2.220 revenue. So in comparison to the excess of $2.212 billion from last quarter, this is actually great in my opinion and was well received by the market. This guidance means Palantir's management is confident. This is a big factor for shareholders because without any number to rely on like customer counts or revenue, this is the next best thing. And honestly, this is the expectations being set by management on how successful the things they talk about, not just the AIP stuff, but everything. Also their deals, their contract announcements, even the things I cover on their open source stuff that I've covered. All of that adds up over time and is supposed to help the company, even if it's not hitting the top line as obviously. Those earnings are proving to be a major milestone for Palantir's investors because the narrative is starting to play out and AIP and the marketing all around that is working with the customer count, especially commercial customer count. Once this trickles into spectacular growth for revenue, this game-changing quarter, in my opinion, and honestly, Alex Karps, because he said it in the call, will be the one that investors look back on as the turning point. And guidance showing this confidence from management too is showing that we can't expect them to grow much faster than previously before, as I think probably weighing on the stock most, because even with mellowed out growth showing even for customer counts, if management is putting on the record they expect this jump in their guidance and of course what they're saying in the earnings call, it means investors have less to worry about the future of the company, and AIP is being the engine that actually drives spectacular growth for Palantir and its investors. Now let's go over the earnings call. I'm going to go over the management roundtable speaking and then the questions portion only. Karp opens with his assessment of the business environment. It's pretty typical here, and Palantir fits into this all. He still believes LLMs and AI are being underestimated by enterprises and just the world in general, so that opportunity to break in is still there and ripe for Palantir. And he's also hounding on competitors on the so-called AI products they provide. He calls them very thin, and if you're one of those companies, I wouldn't be happy to hear that. And he also continues to reinforce that the world is disjointed and their support of Israel in the current conflict. And still, I love this personally. They are taking sides and they do it and it aligns with their mission. At this point, a lot of companies like to tiptoe around, but in my opinion, it's more important to just do what you think is right. Now, questions around Israel to Shamsanker was probably fishing for more details on how Palantir is actually helping them technically. Now, they do a good job of not getting too specific here, and I'm sure there's stuff they can't talk about, but they talk about the parallels with their support of Ukraine. Since they have a strong tech ecosystem already in Israel, he commented how quickly they could adapt in the country. Probably not the same story, though, for Ukraine. Then AIP boot camps on everyone's mind. Sankar talks about magic moments to actually use these AI tools that Palantir provides, aka ontology, which has been developed throughout Palantir's history and is crucial for today and this moment in time. They talk about the boot camps as well, that these are onboarding customers so much quicker and lowering the barrier. These real use cases on their own data converts them quickly and coming back to them because they provide what they need and show value. Now, a bombshell Alex Karp provides is that he sees $1 billion run rate by 2025 here. And this is bold, and I hope to see this happens. He literally calls it a game changer, hence the inspiration for this video's title. And then they ask about how Palantir views the U.S. primes who provide the U.S. government services. They see them as partners, even if competitors back until recently, as Karp said, but their data is useful and Palantir unlocks it, so them working together is much more valuable to the country and each other's business. And if it aligns with their mission and what they think is right, so help them more. Overall, a great call here. I don't have any complaints, and their confidence and excitement comes through on AIP and the boot camps, so I can't wait to see following quarters. Now, this quarter reinforces the story of Palantir, the narrative, and my own thesis here. But we have to remember, there are qualitative factors that everyone has to put their inputs in, and this continues to feed the narrative of Palantir. Investing is an art and science, and seeing the gap that others are missing. The mission of Palantir, I'm aligned with it. The government stability, especially on the military side, and the increased global instability is a tailwind for the company, in my opinion, even if it's not showing today, and will continue to play out over this decade of the 2020s. No one wants the violence, but deterrence too is important. And remember, these government contracts are lumpy, so we may see stagnation in the short term over a couple years. But when renewal happens or a new project finally gets through, it's just a big jump. Of course, a lot of this is driven by the US, and we know at a macro view, this will continue to go up, meaning the size of the pie here and what the government decides to spend. And hopefully the percentage of the pie going to technology increases, which Palantir could win. Plus, FedStart. They've created a market and possibly a monopoly on IL-5 and soon IL-6 for companies to get their hands on government contracts without the administrative and resource and time burdens of achieving this themselves and maintaining it. Now, it's already a win for these companies that plan to just at least try out the government business through Palantir, since they're not going to make that huge initial investment. But the end goal, obviously, is to make them successful and actually scale, because that means the pie for Palantir grows as well and their share of that business too. Plus, the qualitative reliance it builds, meaning Palantir is always in the conversation with the government, even if they're not the main product there. And also tying this to commercial. Believing, in my opinion, they are a true AI play when it comes to infrastructure that I foresee, especially in healthcare, logistics, energy, resource extractions, manufacturing, everything essentially, all the different industries. Just look at the diversity of industries that they're in on their website. They have the tentacles sprawling out in a monopolistic fashion, or maybe in a more friendly way, they're moat within and across industries. And that's very attractive to investors. And to be honest, you have to remember, I'm on the more long-term and patient side here because I see the technology they have. And honestly, ontology is the biggest thing that attracts me working in the healthcare data. It's literally the plumbing that is necessary to get meaningful insights, even if you're just doing basic analytics without AI. The cherry on top now is that AI is reliant on this kind of clean and continuous infrastructure that speaks to itself and speaks to all the different disparate systems there and maintenance. So Palantir, keep doing what you're doing. It seems to be working and has not rattled my own personal thesis, actually has made it stronger, and the company seems to be going in the right direction. But what are your thoughts below?